All right, good night, everybody. Tonight we're going to be talking about the difference between getting a mortgage versus getting a rent-to-own contract, right? I know a lot of persons have been asking me, what's the difference between the two? If I could just pay someone $10,000, $20,000 as a deposit, why not just go and get a mortgage? So the goal of the live tonight is to explain the differences and the benefits of why I think a renting-to-own contract is a little bit better than getting a mortgage initially. I'm also going to answer some of those questions as it relates to what some clients have been asking me. And then, too, if you have any questions while on the live, feel free to drop it in the chat. Hopefully, I'll get to see them as I go through the presentation. But like I said, yeah, tonight's focus is what is the difference between renting to own versus getting a mortgage? Why I like one over the other? I mean, both have its place, right? But it just depends on where you are financially. And so the goal of this, after you finish watching this live, I think you'll have a better picture or understanding of, the strengths and weaknesses of both. If you have any questions, no question is dumb, no question is stupid, feel free to type it in the chat. For anybody who's watching live, let me know if you can hear me clearly before I continue. Drop it in the chat or drop it in the comments. Good night, Stacy. I see you watching. Okay. So hopefully you can hear me. So like I said, if you can hear, please type in the comment box. Let me know if you can hear me clearly. I'm not too sure if the audio is coming through fine. Okay, Crystal said, okay, good. All right, so I hope everybody's doing fine. So tonight we're going to talk about the turnaround process, how fast a rent-to-own contract you can get into one compared to mortgage. We're also going to talk about the upfront closing costs. What's the cost associated with renting to own? What's the cost associated with mortgages? We're also going to talk about any penalties. What's the penalties with rent-to-own contracts? What's the penalties with mortgages? We're also going to talk about which one of those contracts or which one of those arrangement allows you to reduce your balance faster. And when I say which one, I mean, renting to own versus a mortgage. Then we're also going to talk about who can invest in both. I know people want to know if you could get a mortgage with friends and family members. Let's just say if you and two friends want to join together. We're going to talk about that. And then lastly, we're going to talk about how many properties are you able to pick up, especially if you want to use this as an investment strategy. We'll be covering that as it relates to renting to own versus the mortgage, right? So the first thing I want to talk about, the turnaround time. Now, if any of you have ever applied for a mortgage or if any of you have a mortgage, you know that a mortgage could take anywhere from 6 months to a year. And I think since the pandemic has started or since we've entered into this economic climate, it has become a whole lot more difficult to get a mortgage. Typically, it takes you at least about 6 months to 12 months to get approved for a mortgage, right? Now, when you compare that to a rent-to-own contract, it's only typically 30 to 90 days. And the reason why it only takes 30 to 90 days is because you're going directly to the seller. You're not going through the banking process of having to get approved, going through all of the paperwork, doing all the legal details. I mean, you do the legal details in both, right? But with the rent-to-own contracts, because you're dealing directly with the homeowner, the only thing that has to happen is once you submit your payment, you need to give them at maximum about 90 days to move out of the home, right? So when you compare the two with the rent-to-own versus the mortgages, I like the rent-to-own contracts because you move into the properties much faster compared to waiting, like I said, 6 months to 12 months for a mortgage, right? And in some cases, even when you're going through the process of getting a mortgage, I've known clients who started the process and about 3 to 4 months down the line of coming back and giving them paperwork and giving them the job letters and every other detail that the bank is asking for. In some cases, the person never got approved for the mortgage, right? So you end up wasting a lot of time. I'm not saying that mortgages are a bad concept or that it does not work. It's just that for most, it's a very tedious process. It takes a lot of time, right? So let's talk about the upfront costs as it relates to renting to own versus a mortgage, right? Anytime you're starting the process of getting a mortgage, you're executing a sale, right? You have your deposit. Nowadays, it's about 20%. You have closing costs, that's VAT, stamp tax, mortgage commitment fees, you have life insurance that you have to get, you have building insurance that you have to get on the property. Then you also have lawyer fees on the back end for any lawyer that you have contracted to start this process with you. Then you have appraisals that you have to get. Then if the home needs repairs, the bank requires that you have the ability to actually get this home repaired. So you need these extra costs as it relates to getting a home through a mortgage, right? And on average nowadays, that can cost you anywhere between $35,000 to $65,000 up front. Now, I don't know if many of you have that kind of cash just sitting on an account, but if you ask me, I wouldn't feel comfortable just injecting that whole amount that I may have spent 3 years, 4 years, 5 years saving to get a mortgage. Now, when you compare that to a rent-own contract, because it's a lease with the option to buy, you're only coming up with that first deposit. It's not really called a deposit, it's called a consideration payment, and then your first month's rent, right? And usually that deposit or that consideration money is based off of what that seller is requiring you to give on the front end. Some sellers may want $5,000, some sellers may want $10,000, some sellers may want $15,000. It usually just depends on their circumstances, right? So when you compare a rent-own contract versus a mortgage, you can get started with as little as $10,000 along with your first month's rent, right? Especially depending on the area that you're trying to invest into the property. So when you compare $10,000 minimum compared to $35,000, $40,000 minimum with a mortgage, I mean, when you do the math, if you ask me, I'd rather start off with a rent-own contract, especially because, like I said, it isn't so cost intensive. It isn't so capital intensive where you have to give up a lot of funds. And in fact, most times, most people only know to save for their deposit. They're not even thinking about on the back end with the stamp tax, VAT, mortgage commitment fees, lawyer fees, life insurance, general insurance on the building, and all of these other associated costs on the back end when it's time to get a mortgage, right? And so moving along, let's talk about the penalties of the contract. If you've ever, or if you know someone who has been foreclosed on, in most cases, if someone started off with a mortgage and they ended up being foreclosed on, it's going to take them about 10 years or so to actually clean up their record with the bank in order for them to get another mortgage again in the future. Now, when you consider a rent-own contract, because it's an agreement directly between you and the owner, if you cancel your policy or if you cancel the contract with the owner, it's just privy to you and them. So there's no real penalty per se. Obviously, you lose your deposit and any investments or improvements that you would have made to the property, you lose all rights to that. But it doesn't affect you whenever it's time for you to go and get a mortgage from the bank, because the bank would not be aware that you would have entered into a rental contract before, and maybe circumstances came up where you couldn't afford to continue with the payments, and so you had to cancel your contract. So that information is only between you and that particular seller, compared to if you get foreclosed on a mortgage, that's public information. That's information that the bank uses against you whenever it's time for you to go and reapply for mortgage, because, they're only protecting themselves, and I understand. But in cases like that, I've known of persons who, let's just say, some people I may have come across, they would have gotten a divorce, right? And during that divorce, let's just say the husband didn't move out of the home, and they fell behind on payments because maybe one may have lost their job, right? And now this lady, she's now single. She wants to start over again. She's now in her late 30s, maybe early 40s, or maybe late 40s. And it's now time for her to try and get a mortgage. And the difficulty she has is she's been foreclosed on before. And if you have to wait 10 years just to get that credit or just to get that fixed on your record, it's kind of difficult to come back later on and get a mortgage to get a home. So I would tell anybody start off with a rent-own contract, because it's less, I guess, judgmental per se, if that makes any sense, And then we have reducing the main balance of your purchase price. When you start off with a rent-own contract, in most cases, 50% of your monthly payment goes towards reducing the balance that you initially agreed to. So let's throw some figures out there, right? Imagine you met someone and they have a home, they want to sell it for let's just say 100,000 for ease of numbers, right? And they say, okay, we want you to pay us a monthly lease payment of $1,000 a month. In most cases, you can get at least about $500 of that $1,000 payment from the start of your contract going towards reducing that $100,000 purchase price. So this means that every month that you pay $1,000 in rent, $500 is being taken off of your purchase price, right? In some cases, you may have the full amount of your monthly payment, reducing the balance of your contract. So when you consider the fact that most rent-owned contracts last between 3 to 5 years, in 3 years, you would have taken about $18,000 extra on top of your initial deposit from that purchase price of $100,000. Now, when you compare it to a mortgage, if any of you have a mortgage now or have had a mortgage, you know the minute that you apply for a mortgage, 90%, maybe even 95% of your payment is going towards interest. The bank is making sure that they're going to get their payment, or they're going to get the money that they're charging you to borrow the funds from them much sooner than allowing you to reduce your balance that you owe with them on your mortgage. So let's just say if you have $1,000 monthly payment on your mortgage, maybe only about $100 of that monthly payment is going towards reducing your balance. That's why if you've ever spoken to anybody who's had a mortgage, in most cases they would say that, you pay the bank back 2, 3, 4 times what you initially borrowed. And that's because only a small portion of your monthly payment goes towards reducing your purchase price or the amount that you borrowed. So when you compare the two, and for those of you that are just joining the live, you can actually rewatch this at the end of this. But for anybody that's starting off with a mortgage, it's going to take you much longer to pay off your balance. You're going to be paying a mortgage for about 25, 30, 40, 50 years, right? Some people die before they even get to permanently pay it off, right? And so when you consider a rent-to-own contract, you're paying directly to the owner, so you get to negotiate a much more favorable payment option for you, where you're going to pay this $1,000 a month. You can get at least about $500, depending on the circumstances, obviously, of the owner, or you get the full amount towards reducing the price. So when you compare $1,000 being reduced off your balance, which ends up being $36,000 over a 3-year period, compared to $100 a month with a mortgage, which is only $3,600 over a 3-year period, I would always go for a rent-owned contract first. Even if I know I can get a mortgage, I would always start off with a rent-owned contract, because I know by the time as I go and get the mortgage, it's a whole lot, my balance is a lot less than if I initially started off with a mortgage, which means that you have a shorter amount of time to pay off the balance when you start off this way, right? And it all really depends on what your preferences are. Some people just like to deal with the banks. If I could, cut corners and get some stuff done faster, I definitely would go to rent-owned contract, right? So now let's talk about who can you invest with. Most people that I meet, they want to either invest with their, like it's a mother and daughter situation, or a mother and her children, or a group of siblings want to invest together. They may want to get some apartments together, or maybe 2 friends who want to invest together. When you're trying to get a mortgage, the only people who can get a mortgage from the bank, if it's 2 people, it's either a married couple, and not an engaged couple, a married couple, or you as a person, you have someone, maybe like your mom or your dad, who signs on as a guarantor, right? That's it. And a guarantor is basically someone who is going to step in for you if in the event that you fall behind on the payments, because the banks want to know that if you can't commit to your mortgage payments, you have someone on the back end who's going to be responsible for these payments, right? So they're very strict. They're not in the business of allowing people to collectively invest into real estate. And that's a problem for me, right? Because you have a lot of like-minded friends, family members. You guys may want to pick up a bunch of investment properties like apartments, or get a bunch of land together. And because the rules at the bank doesn't allow you to, it leaves you in a bind, right? And so when you consider a rent-owned contract, because you're going directly with the owner, you're allowed to do these things creatively. You're allowed to come together with maybe 2, 3, 4, 5 of your friends or 5 of your family members to allow yourself to invest into property, right? And this is the real desire I know that most people have, especially because a lot of persons don't make a lot of income right now. Wages aren't as high, but the prices of things are continuously going up. And in most cases, a single income individual, unless you're making about, let's just say $60,000, $70,000 a year, most can't qualify for the price of these homes nowadays. So when you compare a rent-owned contract with a mortgage contract, a rent-owned contract allows you to have these, creative deals put together where you can invest with family, you can invest with friends, two of your boys or two of your girlfriends, y'all two could invest together, and y'all could build your real estate empire. Now, as it relates to a mortgage, like I said, if you ain't married or if you ain't making enough income, don't think about it, right? And if you ask me, I like the freedom of choice. I like to come together. You know, most people, or most times when we talk about, let's just say the Chinese community locally, right? We talk about how they pool their resources together, how they come together to achieve certain goals. And, you know, I don't know if any of you have been, I guess, exposed to it in your family or in your community. Most of us black people, we don't do these things together, right? We leave things to chance. And so when you consider rent-to-own contract and the fact that you could talk directly to someone who owns the place and set up this type of creative agreement with them where you, your friend, your family member, all of you can come together, everybody put in maybe $2,000, $3,000, or $4,000 together to accumulate for your deposit, and you put it on rent, everybody split the cash flow from the property. Or if it's a triplex, you know, and the seller's asking, let's just say $15,000 up front, your friend puts in $5,000, you put in $5,000, another friend put in $5,000, and each of you control your own unit within the building and be responsible for splitting that monthly payment 3 ways. But if you go through the mortgage, you know how that's going to go, right? And then lastly, let's talk about how many properties are you usually able to invest in with a rent-to-own compared to a mortgage. In most cases, the bank is in the business of helping people get homes. They're not in the business of helping people build wealth, right? You get to a point, let's just say, most people, if they ever start their journey of investing in real estate and, you know, they start at a young age, later on they want to get more properties. The challenge becomes sometimes where with the banks, they are a bit strict. They don't want to give you too much loans because as far as they're concerned, you may be over leveraged, right? And I mean, as far as they're concerned, if I can't pay it, then just take the property back. You know what I mean? But, you know, it is what it is. But when you consider rent-to-own contract, you could pick up as much properties or you could invest in as much real estate as you could afford to. Obviously, if you fall behind on payments and you fall into hard times, you could lose your contract, right? But the same thing with the bank. But the bank is a little bit more restrictive where if you want to get a property through them, most cases, you're only allowed to get maybe one. Maximum, maybe two. But with these rent-to-own contracts, because you're going directly to someone who owns a place, you and your family members could get as much properties as you guys can afford to, right? Now, I know a lot of people are a bit skeptical about the process, and that's totally fine. I'm not here to convince you on why you should consider this as an option. But, you know, going forward, I think this is the only real opportunity for a lot of average Bahamians. You know what I mean? So tonight I covered, you know, we talk about the turnaround time and how a rent-to-own contract, you can move into a home within 30 to 90 days. If the home is vacant, you can get the key as soon as you submit your deposit, right? It depends. With a mortgage, it's at least about 6 to 12 months. And in most cases, you start that process is not even guaranteed that you're going to be approved, right? If you've ever tried to get a mortgage, you would know that, right? Like we talked about closing costs. We talked about the fact that with a rent-to-own contract, the only thing that you come up with is your deposit and the first month's payment. There's no closing costs associated with a rent-to-own contract because it's not a sale as yet. But when you compare it to a mortgage, you got your deposit, which is around 20%. You got VAT, you got stamp tax, you got insurance fees that you got to pay, which is general insurance and life insurance. You have to pay mortgage commitment fees, which is about 1%. Then you have lawyer fees, which is another 2% on top of the stamp tax and the VAT. And then you have other miscellaneous costs, right? You need at least about $40,000 to $50,000 just to invest into a place. Let's just say if it costs $150,000 or $200,000, right? And then we talked about the penalties that happen if in the event that you fall on hard times. If you can't continue with your payments with a rent-to-own contract, there's no penalty. You just lose the contract, right? But with a mortgage, you fall behind on a mortgage and you get foreclosed on, it's going to take you at least 10 years to bounce back to be able to borrow again for a mortgage, right? I've come across a lot of divorcees who fall into this category. Then we talked about how fast can you reduce your mortgage or your balance. Most times when I speak with people who are interested in buying real estate, they hate the banks. They feel like they'll be paying the banks forever, right? And the benefit of a rent-to-own contract is that you can have up to the full amount of your monthly payment reducing that initial balance that you started off with. When you compare that to a mortgage, 90% of your payment is going towards paying the bank's interest, right? Only about 10% of that is actually being applied to reducing your balance, which is why you end up paying a mortgage for 30, 40, 50 years because of that fact. With a rent-to-own contract, depending on how you negotiate it, you can pay this balance off within 5 to 10 years if you do it right, right? Especially if you want to avoid the bank. And then we also talked about how many people are allowed to invest into property with a rent-to-own versus a mortgage. Your family, your friends, or any investment group can get together to invest into real estate with a rent-to-own contract. If you want to get a mortgage with family and friends together, it's going to be near impossible unless you guys are married, right? Or unless you have that cash equivalent in the bank where you can get a cash secured mortgage, right? And then we also talked about how many properties are you allowed to buy with a rent-own contract compared to a mortgage. In most cases, the most I've seen the average person has been able to invest using a mortgage is maybe one time. But you can get as much rent-own properties as you can afford to, because these things you're dealing directly with the owner. And like I said, the penalty is if you can't afford to pay, then you just lose the contract. But it doesn't show up in your credit history, right? And so, now in the Bahamas, we're moving to this process of having a credit bureau. I think we already have that in place. So, guys, going forward, it's 2021. You know what I mean? I've met family members or families who've been searching for homes or trying to get a home for the last 10 to 15 years. You know what I mean? At the end of the day, time is going to go by, regardless of your opinion on whether you should invest into a rent-own or whether you should get a mortgage, right? Do your due diligence. Do your research. I mean, obviously, most things are a risk, or some things can be a risk. But, look at the contracts. See how the contracts work. Don't knock something before you actually try it, right? Right now, I do have a mentorship program where I help people get these rent-own contracts, but I've recently closed it off for now. But my goal is to continuously provide you with education on helping you get closer to home ownership, right? So I think Philippa is on the call. I think she is. But anyway, so the overall goal, and going forward, maybe every week, I don't know how often I'll do this, because, I'm now investing in real estate for myself with these rent-own contracts, but I'll try to do these lives a little bit more often. But the overall purpose of this is to provide you with more education on knowing your options. So when you make a decision, you're making a decision based off of information and not based off of your feelings, right? Now, if any of you want to reach out to me and contact me, just comment on this live, say I need help or whatever, and I'll send you guys a message, right? But if you have any questions, I'll allow maybe about 2 minutes or so for question sessions related to renting to own. So feel free. Now, if nobody has any questions, if you want to rewatch this will be available in the group for anybody to watch this if you catch this a bit late. So if you're catching this on the tail end of it, But I would always, once I figured out how to do this rent-own stuff, I've never went back to looking at a mortgage, because now I know what I know. You know what I mean? And there's a saying that once the mind has been expanded, you can't go back, right? So if you don't, so Charlene said I need help. Okay. So for those of you that are commenting that says you need help, I will try to send you a message between today and tomorrow, depending on how many of you are commenting on this. But I hope this live was helpful for you. Like I said, the main intent of these lives is to provide you with information, so you're not making these decisions based off of feelings or what your friend tell you who ain't know nothing about these types of stuff. In fact, I find people who give the most advice is people who've never invested in anything themselves. They tell you, get a mortgage, go do this, go do that, but they still rent it, right? So you decide which information that you're gonna take and listen to. Like I said, my job is not to convince you, but to just provide you with the education enough where you can make a sound decision for yourself and for your family. If you find that you've been searching for property for the last 5, 10, 15 years and you're running into these roadblocks, give something new a try, right? And so, I'm sure a lot of people have been wondering how this process works, but you really don't get the benefit of it until you actually start it, right? Yesterday, I helped a client close on a home, in Victoria Gardens, and we did that in about 2 weeks. You know, the only thing she had to come up with was a deposit and a first month's rent payment. And I think she's going to love the journey of this rent-own experience with her. In fact, I have some clients now reaching out to me now because they're about to pay off the balance on their homes, who we have helped maybe 3-4 years ago, right? So, you know, if home ownership is important to you, I think especially for 90% of you in this group, renting to own may be the only option that you have. And it's not a desperate option. It's not something where you're giving up on, or you should see it as something that is low class or it is invaluable. Trust me, this is the perfect climate for these types of things because you have many homeowners who are trying to leave the country. You have people that are getting divorced. You have people who may have inherited property that they want to sell. If you live in a place right now and you want to negotiate a rent-own contract with your landlord, you can reach out to me. I'll help you set that up. But other than that, I hope this live was informative tonight. Like I said, my main intent is to continuously provide you with information. I hope everybody have a good night. If you have any questions, comment on the video. I'll try to get to it as soon as I can. And if you want me to reach out to you, just comment on this video and say, I need help. All right? So, good night. I hope this was good.